U.S. stocks higher today, and of course that so-called taco trade continues. The wits saying Trump always chickens out on his threats of tariffs. Let's get more from Jed Ellerbroek, who is a portfolio manager at Argent Capital Management. Jeff, thank you very much for coming on. Is that a theme you're picking up today? Investors optimistic that this trade stuff will get modified and moderated in negotiations?
Yeah, I think at this point, investors have seen this story before. President Trump tends to make maximalist demands in an effort to improve his negotiating leverage, and then is usually happy to settle, for something far less than the maximalist hope. So I think markets are assuming that process will continue. His threats are back, at the Liberation Day highs, really, at this point. So that's concerning. That's a risk, but investors believe we know how this story will end, and it'll end with a reasonable compromise. And hopefully we get there in fairly short order, because all the uncertainty is not a great thing for consumer spending, for businesses willing to invest, complete mergers and acquisitions, build the next big warehouse, et cetera.
AI spending still a theme. Do you think that's going to push up companies linked to AI, including the chip stocks? Yeah,
well, we saw a little bit of that AI, construction infrastructure hype today with Mark Zuckerberg's tweets about their construction plans and the data centers they're building. That stock is up today, so the markets obviously like that news. But I think it's an open question whether investors are going to like rising CapEx numbers from the likes of Microsoft, Google, Amazon, et cetera. In past quarters, investors haven't really responded positively toward those, kind of increasing capital intensity news items. Will they this quarter? I think perhaps they will. I think that the investor comfort with, AI and the huge kind of revolution it will represent for business efficiency and also consumer purposes is rising. But is it rising enough to get Microsoft stock to go up after they announce big CapEx for fiscal 2026 here in a couple weeks? That's to be determined. As it relates to the chip stocks, yeah, that's unmitigated good news for the likes of NVIDIA, Broadcom, Vertiv, et cetera.
As you say, Microsoft reports, we're expecting the numbers July 30th, just over 2 weeks away. You think this will be a very important bellwether for the whole earnings season?
Yeah, I do, because they will be the first to give their CapEx intentions moving into 2026, which has been a big investor concern as it relates to NVIDIA for the last year, really. I think that they're going to say CapEx is going to increase at a double-digit rate year over year versus the year that they just completed in June. That number is going to exceed $100 billion, I think. And that commitment will express a lot of management's enthusiasm about AI and the opportunities to deploy AI into their existing software offerings, and then obviously roll out Copilot to the whole world pretty much.
I'm just looking at the Magnificent Seven this year. Microsoft's had a great year. It's up 19%. Meta up about 23%. Amazon has been pretty flat. It's up about 3% so far this year. What's your view on Amazon? Would it be a stock you would buy with new money?
Yeah, it is. Amazon is our favorite stock. It's the largest position in Argent's large cap strategy, which I manage. The stock has underperformed some of those peers you mentioned because Amazon has suffered from more tariff fears. Their business, most of their sales come from the retail sales, from their website. Tariffs threaten that, to a much greater extent than it does, for example, Microsoft's sales of Word and Office and Excel and Azure. So those tariff concerns were very high early in the year. Amazon stock really suffered. It's come back lately. I think that recovery will continue. I think Amazon has a lot of exciting stuff going on with an AWS. I think growth rate there of revenues will accelerate as this year unfolds, getting close to 20% by the end of the year. And then I think the retail business continues to just extend its really dramatic advantage over peers. It's outgrowing almost all of its retail peers, and profitability, I think, is going to improve much faster than even revenues because the company's achieved great scale with their distribution and shipment to consumers. And so I foresee continued profit growth probably in the neighborhood of 20% a year for the next several years from Amazon.
Andy Jassy, he sounds like a bit of a hard-nosed individual. He's told people they got to come back into the office full-time, and he doesn't want meetings to set up meetings to set up meetings. I mean, you can't blame him wanting to cut some of the bureaucratic thickets. But you think Jassy's done a decent job as CEO of Amazon?
Yeah, we are really happy with his almost 4-year-old tenure at this point. I think he's more focused on efficiency and profitability than Jeff Bezos was, and probably a little bit less focused on the moonshot kind of new business spending ideas. And I personally like that as a big Amazon shareholder. I think the company can balance the two and do both. They can invest in the Kuipers of the world, new projects that aren't currently generating revenue but hold great promise, but also focus on efficiency and profitability. And I think there are really, really large efficiency improvements yet to come from their retail distribution business. Those, 700 warehouses they have around the world that are shipping products to consumers quicker and more efficiently than they ever have before. There's a long way to go with that, especially as they deploy robots throughout the warehouses.